Good morning, you're watching Daybreak on Bloomberg Quint Live and I'm Alex Matthew. Here's a look at the headlines. Asian markets are trading mixed in early trade with Nikkei in Japan heading lower. The RBI withdraws most debt restructuring schemes, laying emphasis on the insolvency and bankruptcy code for bad loan resolution. The Delhi High Court bars Shree Infrastructure from selling a slurry pipeline attached to Essar Steel's Odisha plant. And US sales are expected to weigh on Sun Pharma's third quarter earnings, which come out today. Turning to the international markets and beginning with the US markets, US stocks advanced for a third straight day, while the dollar fell and treasuries rose ahead of today's inflation report there. Volatility levels, however, remained elevated even after stocks' modest recovery over the past few days. And that shows continued unease after the rout that wiped $2 trillion from the US shares last week. The consumer price inflation data that will be released in the US later today gains more significance in the light of recent sharp swings in the markets. And the sharp fall in stocks began on account of fears of accelerated rate increases by the Fed. Look at the levels. The S&P 500 ended higher by 0.3%, while the Dow and Nasdaq climbed 0.2% and 0.45% respectively. Let's turn now just very quickly to mention that the Asian markets are mixed in early trade, with the Nikkei trading lower. We'll have to see how that pans out. Let's turn to the Indian market and see where that's going today. And Darshan Mehta is here to tell you all about what you have to watch out for today. Morning, Darshan.
Yeah, good morning, Alex. Because what we are looking at this point of time, Asia is trading weak, but the global cues seem to be pretty decent. The S6 Nifty is indicating a gap up of almost 75 points. But remember, we were shut yesterday and the SGX Nifty was down almost 60 points. So expect pretty much a 20-point gap up opening as per the current rate when we open for trade. So don't expect a bumper 75-point opening because we need to know that, yesterday we were shut. How did the ADRs pan out in trade? It was a mixed set of cues that came in. Infosys was down almost close to 1%, but muted close for ICICI, Tata Motors as well as HDFC Bank. The other ADRs, Wipro did well. It was up almost 0.7%. Vedanta was flat in trade. Dr. Reddy's was flat in trade. Now, if you're looking at the other cues, especially oil has been rather muted for the past 3 days. If you're looking at what's happening with oil currently, below the $60 barrel per mark is where WTI is trading. And the Brent is trading close to the $62 barrel per mark. Now, what happened as far as base metals in London was concerned? All of them ended with a positive bias. So copper was up almost 2.3%, zinc was up almost 2.6%, nickel was up almost 2.7%. So all the base metals ended with gains over close to 2%, except for aluminium, which was trading flat in trade. What we saw as far as China is concerned, the start is good. We have seen copper up almost close to 1%, zinc is up almost close to 2%. Aluminium again is trading slightly muted in trade. As far as the silver, as far as the precious metals are concerned, all of them are trading with a positive bias currently. Now, what happened with the fund flows? As far as the flows on Monday were concerned, FIs were net sellers to the tune of 915 crores. DIs bought in almost 1300 crores in the cash market. FIs on the month-to-date basis have sold in almost for almost close to 5,000 crores, while 6,700 crores of net buying has happened by the DIs as far as this month is concerned. So that's the traction that we're seeing as far as trade is concerned. Now, the Nifty ended up almost close to 1%. The mid caps and small caps managed to outperform. They were up almost 1.4% and 1.8% respectively. What happened as far as the VIX was concerned? VIX was down almost 7% in trade. Some of the sectors in focus, you had the Nifty Energy, which was up almost 1.3%, and the Nifty Energy and Nifty Realty, which was up almost 1.7%. Now, as far as our markets were concerned, how did it pan up? We were up almost 84 points. What contributed? Obviously, it was the large caps. So, Reliance, HDFC Bank, and HDFC contributed maximum to the green on the Nifty. SBI, SCL Tech, and ITC were the main contributors of a dropping market. But Agam is here in terms of what happened as far as the F&O space is concerned. Agam, what's happening?
Right, Darshan. So let's start off with what's happened in the Nifty. As we can see, there has been very little moves with respect to the open interest, which moved up by as much as 5.5%. But moving in when it comes to the Nifty Bank futures, in terms of the movement, we did see it gain as much as 1% for its underlying, but very little change in the open interest. Moving in terms of the India Volatility Index, that has again come off. But we've seen very large moves over the past couple of sessions. So this is not untoward. However, we are looking at the VIX currently standing at around near the mark of 18. The put call ratio, again, very little change, as currently standing at around 1.1. But in terms of open interest and where we've seen a little more activity is the 10,600 call. There's more writing. And also the 10,500 put, surprisingly, a put which is lower than the strike of the call, is also seen a little more writing coming along. What we're also looking at is new entrants in the F&O band, such as Dish TV and JP Associates. And JR Integration moves out of the band. We're also keeping an eye on counters like Bank of Baroda, which has seen fresh longs. In fact, the underlying went up by as much as nearly 8%. And we're also looking at Nestle India, which also saw some fresh long build up. So once again, today's day of trade will be driven largely by the broader markets, and we'll keep an eye on what the benchmarks also do as well.
Thank you so much for that, Agam. Let's take a check on the Asian markets. We'd mentioned they're trading essentially a little mixed right now, and that's despite the positive close on Wall Street. Let's head across live to Bloomberg's Rosalind Chin for all the updates in those markets. Morning, Rosalind.
Hi there. Yes, certainly a rather mixed picture here. The MSCI Asia Pacific Index, though, pulling slightly higher, up by about 0.15% right now. But yes, the big markets in Japan are pulling into the red this hour. Now, we have had some economic data from Japan today. Fourth quarter GDP not doing too badly, expanding from an eighth quarter, but the pace of growth actually fell quite steeply and missed economists' expectations. That might, of course, take a little bit of the edge off inflation expectations into 2018. Yen trading slightly stronger at 107.74 to the US dollar right now. Kospi really in South Korea leading the gainers right now, is up by nearly 1%. The IT sector, healthcare are among the strong performing sectors there and leading the gains. But one company that we're looking at is Lotte Group. Now, its chairman Shin Dong-bin was jailed on bribery charges that came as rather a surprise, and we're seeing its stock take a hit today. It was down by more than 7% at one point. Now it's down by just under 5.5% there. So a bit of turmoil there hitting the Lotte Group conglomerate. Over in South Korea, over in Australia, we see the S&P ASX 200 index. It's just about flat right now. Really can't decide which way it's going. It's been dipping in and out the red all this morning. In China, this is the last trading day for the year of the rooster. Markets will close tomorrow for the Chinese New Year holiday, and when they reopen, it will be the year of the dog, a new year. So we're looking right now at the Shanghai Composite trading higher by 0.15% right now, and the Hang Seng up by about 0.75% this hour. We'll be keeping an eye out, of course, what happens later for those US CPI numbers. That is a lot of investors are focusing on that and what it could mean, of course, for Fed policy into the year. Back to you.
Absolutely. That's a key number to watch out for. Thanks so much for that, Rosalind. Let's move now and take a check on the rupee and the bond market ahead of trade today. Those two markets will likely be in focus. And Saloni Dhanuka joins us with all the details there. Morning, Saloni.
Good morning, Alex. So talking about Indian rupee, it was tracking gains in the Asian currencies market on Monday, and it closed higher against the US dollar. Now the home currency moved in a narrow range of 10 paise and before settling 8 paise higher at 64.32 levels against the dollar. Elsewhere, India's factory output expanded at 7.1% in December, which is well above the expectations of 6.1% growth. On the other hand, retail inflation came in line with expectations at 5.07%. Now, both these data may support rupee in today's trade. Moving on to debt markets, sovereign bonds declined as yields on the new 10-year benchmark security ended 1 basis point higher at 7.50%. On the global front, the Japanese yen rose to a 5-month high yesterday on speculation that Bank of Japan may reduce its monetary stimulus program. According to a Bloomberg report, on this news, yen jumped almost more than 1% against the dollar, and it trades well below the 108 mark. Speaking of the dollar index, it extended losses for the second day and it ended 0.5% lower at 89.50 levels. All eyes will be on US CPI data to get an insight about what the Fed policy outlook will be for the for this financial year. Well, coming back home, dollar rupee is trading at 64.26 levels against the dollar in the non-deliverable forward market, which indicates a positive opening for Indian rupee in today's trade, Alex.
Thanks, Saloni. Moving on to some macro data now, as the seasonal spike in vegetables continued to cool off. India's consumer price inflation for the month of January stood at 5.07%, a marginal reduction from the 17-month high of 5.2% in December last year. Economists polled by Bloomberg had estimated that prices would rise by 5.1%. This also comes a week after the Reserve Bank of India had warned of upside risks to inflation in its recent monetary policy review. On the other hand, India's index for industrial production rose 7.1% in December compared to the corresponding period last year. The IIP had risen at its fastest pace in 19 months in November. The growth was led by manufacturing, the output of which rose by 8.4% on a year-on-year basis. Right, the Delhi High Court has stayed the sale of the Slurry pipeline feeding Essar Steel's plant in Odisha to New Metal Mauritius. Vishwanath Nair joins us on the phone line to tell us why this pipeline is so important to the bidding process. Morning, Vishnu.
Morning, Alex. So this pipeline is a 253-kilometer long pipeline. It ranges between an iron ore mine and the iron pellet making factories that Essar Steel owns in Odisha. And it's important because it is responsible for about 50% of the raw materials that the steel plant uses. So, by all means, it actually reduces the price of transportation of this raw materials. Any other means would be far more expensive. So it's a critical part of the whole of the plant and its ability to actually run its operations. But the problem is that this company that owns this 250-kilometer pipeline is actually outside Essar Steel and is not part of the resolution process. In this, there has been a dispute of ownership between Shrey Infrastructure and Essar Steel in this matter. Essentially, in 2015, they had agreed to get into a sale and leaseback agreement where Essar Steel would sell 70% stake to Shrey's growth fund, and it would lease it back for usage for the plant. But then this deal was then cancelled in 2016, wherein because of the bankers' pressures, Essar Steel sort of backed out of the deal. Shrey has since then been contesting in the Calcutta High Court, saying that it actually owns this pipeline and that it should have been asked before such a deal has been cancelled. So there is that debate is still going on in the Calcutta High Court. They've actually put an injunction, which is a status quo on the matter. After that, now that the insolvency process in Essar Steel has started, New Metal Mauritius, as we know, is a VTB bank-promoted special purpose vehicle based out of Mauritius. It has actually already put in a binding bid for Essar Steel's assets under the insolvency program. New Metal also has a minority shareholder who is Revant Ruia, who is actually the son of Ravi Ruia, the founding partner of the Essar Group. So it's important to notice that, now New Metal is entering into a sort of a deal with Shrey to buy this plant, buy this pipeline. The point is that if a bidder owns a very critical piece of the whole infrastructure, then they have an advantage over any other bidder. The other bidder in this case being ArcelorMittal. So lenders opposed this whole deal, and they went to the Delhi High Court and tried to, stop this deal. And now Delhi High Court has adjourned the sale and has said that the sale cannot happen till the 5th of April, which is when it will take a final call on the matter.
Right, and speaking about the Essar Steel resolution, the two bids that you mentioned, the two bidders rather, you have ArcelorMittal and New Metal Mauritius. Putting in context the recent update with the court ruling, what's the update with regard to the bidding process?
Well, the bidding process continues as it is. New Metal and ArcelorMittal have bid for the process, and as such, the plant is receiving all the raw materials it needs. So that continues as it goes on the ownership of the pipeline, that will be decided by the 5th of April. We understand from our sources who are part of the whole bidding process that by the first week of April, it is likely that we will have a winner among these two bidders, because the process of evaluating these bids and deciding who actually owns the pipeline would be over by then. So hopefully by the 5th of April, there will be some clarity on who actually owns the steel plant and therefore then the pipeline.
Thanks so much for that, Vishy. We'll of course take with that news update over the course of the day, and there'll be a lot more that there has to be discussed. We'll come back to that story later, but let's shift focus to the commodity space now, and Jayesh Khilnani joins in with all the details in that market. Morning, Jayesh.
Morning, Alex. So it was a good session for the base metals overnight on the London Metal Exchange, with the index climbing as much as 2%. As far as individual base metals are concerned, we had copper, zinc and nickel, which gained more than 2% each, while lead and tin gained nearly 2% each. Now the climb in zinc prices is largely attributed to analysts saying that the zinc market is likely to remain tight going into 2018 and hence the upward bias. As far as precious metals are concerned, we saw that COMEX gold is now trading higher for the third consecutive session on the back of the dollar index, which has now declined or trading with a negative bias for the third straight day. COMEX gold has climbed above the 1330 per ounce mark. As far as oil prices are concerned, we saw some bit of dip come about for oil prices overnight. Mind you, WTI has been trading below the 60 per barrel mark for the fourth consecutive session. Now, all of this is on the back of surprise inventory buildup that we are expecting. So the crude inventory for US is likely to expand as much as 4 million barrels for last week, while the gasoline inventory is likely to expand more than 4.5 million barrels for last week, as per the American Petroleum Institute data that is likely to be reported later this day.
Thanks so much for that, Jayesh. On to the last leg of quarter's earnings this season. GAIL reported a subdued third quarter, and profits and operational performance both missing the analyst estimates. Somit Sarkar is here to sum up what went wrong for GAIL during the quarter. Morning, Somit.
Good morning, Alex. So GAIL reported a weak third quarter of financial year 2018. Now, though revenues were higher by around 16%, EBITDA fell down by 5%. On the margin front, it contracted to 13.7%, while net profit fell down by around 4% to 1,262 crore rupees in the third quarter of financial year 2018. On the operation side, if you see, however, the gas transmission volumes were up by 3%, while petchem volumes remained flat at 176,000 metric tons. Now, 5 key takeaways from GAIL earnings. First, operationally, the numbers were below estimates because of higher employee costs and other expenses. However, on the bottom line, the numbers were largely in line because of significantly lower interest cost and marginally higher other income. On the volume front, gas transmission volumes surprised positively, led by increased offtake from power plants due to lack of coal supply, while the petchem volumes remain muted. Now, analysts were expecting the petchem volumes to come in at around 185,000 metric tons, but the company reported a number of 176,000 metric tons due to because the petchem plant in this quarter was interrupted due to a power supply disruption. Now, on the brokerage front, if you see, Motilal Oswal, Antique and Citi have maintained their stance on the company, while IDBI Capital has downgraded the stock to accumulate, citing limited potential upside. Lastly, the company also declared an interim dividend of 7.65 rupees per share and a bonus issue in the ratio of 1:3.
Thanks so much for that, Som. Now, the last nifty company to report its Q3 earnings is Sun Pharma. It's likely to be a weak quarter for the company post Taro's numbers, isn't it, Darshan?
Came out with a very poor set of numbers, and probably the market's indication of Sun Pharma reporting a weak set of numbers maybe actually factored in. Now, overall, what is anticipated? A 12% decline on the bottom line, on the top line, a bottom line decline of almost 45%, and EBITDA decline of 38%, which means margins will come in close to 22% versus 31% last time around. Mainly, Taro numbers were extremely weak. They've reported the numbers. Overall, there was a drop on the top line line, bottom line, and margins came in just at 40%. So that is something that, will significantly wane on Sun Pharma. Now, on a quarter-on-quarter basis, yes, it will be decent because, a lot of orders have been deferred into the third quarter, which couldn't be booked into the second quarter. So that will come into this quarter. Seasonally, it's a strong quarter for the subsidiary DUSA. Plus, they also launched the Corex CR, so that will aid revenues for the company. Apart from it, re-entry of some of the products that were sold from Halol, Glivec market shares gain that will aid to the top line of the company. But nevertheless, pricing pressure, competition, all these factors will wane on Sun Pharma in the US markets, and that is why we are seeing a 30 to 35% drop on the US business this time around, and a double-digit growth on the domestic business on a low base last time around. But overall, expect a weak set of numbers from Sun Pharma today.
Thanks so much for that, Darshan. Moving to the stocks in news, Shraddha Babla joins in with all the stocks that you have to watch out for and trade today. Morning, Shraddha.
Morning, Alex. To start off with, we're watching out for Indoco Remedies, which has received 8 observations from the US FDA under Form 483, and this is for its Goa plant. They don't seem like any very severe observations, but still let's see how the stock reacts. Piramal Enterprises, where they will transfer assets to its unit Piramal Finance for about 1900 crores. You also have a PTI report which says that Puravankara is looking to create a real estate fund of up to 2000 crores to develop affordable housing projects, so watch out for that one. Precision Camshafts is another one, a smaller company, not too much traded in terms of volumes, but they've received multiple orders worth 275 crores, so we could see some positive reaction there. Rolta India, which has signed a deal to restructure its dollar bonds which were due in 2018 and 2019. You also have a Mint report which says that Max Life has emerged as the front runner to buy IDBI Federal Life Insurance, so watch out for names like IDBI Bank, Federal Bank, and also Max India. You have Fortis Healthcare, a couple of news flow over there. They have signed an agreement to buy all the assets of RHT Health Trust, something which they had proposed earlier, but now this is for an enterprise value of 4,650 crores. That apart, they've also formed a panel to oversee strategic and operational functions of the company after its directors, the promoter directors resigned, and they've also sought extension till February 28 to announce the second and third quarter results, so watch out for that name. And lastly, we're also watching out for KRBL on the back of bulk deals in which Monish Pabrai, the investors, Pabrai Investment, bought 2.7% stake in the company on Monday. And you had Abdullah Ali Balsharaf and Omar Ali Ubaid Balsharaf, who sold 1.4% each, so it's a partial stake sale from each of them. So let's see how that stock reacts.
Thanks so much for that, Shraddha. Moving on, India's only reinsurer, General Insurance Company, returned to profit in the quarter gone by, reporting a net profit of 673 crore compared with a loss of 400 crore in the corresponding quarter last year. Ridhima Saxena caught up with Alice Vedyan, who is the CMD of the company, to get a sense of the quarter gone by. Here's a slice of that conversation.
Fivefold increase, you're comparing it with the third quarter of last year, where we had some losses coming in. But this year, on the back of very good growth of the company for the 3 quarters, like you see, we are seeing the growth in the agriculture segment also. And also on the back of good underwriting that we have done, and a very conservative reserving, we have been able to show very good profit after tax this time.
Ma'am, there is a spike in the claims that have been paid as well. So which segments contributed to that?
Yeah. See, if you have been observing the trends in the international market and domestic markets for some time now, last 2 quarters we have seen claims for Harvey, Irma, Maria, Mexican earthquake, Californian fires and all that. So all big reinsurers of the world have taken a big hit from these. So we have also had to pay out claims for that. So around 1900 crores claims we have paid out for all these catastrophe losses. Yeah. And agriculture claims have also come in because it's seasonal. So depending on the season is over, Kharif season is over, and the claims are slowly coming in. So for these 2 segments, we have paid out claims.
Talking about the agriculture insurance business, which has become a significant part of the portfolio, considering that you take on 50% of the crop insurance risk. I would like to ask that the claims have increased to about 980 crore. In fact, the IBNR reserves have also spiked to some 353% to 12,000 crores. So how do you see that changing? Do you see the reversal coming in? And how do you think that would happen?
Yeah. See, the earlier quarters we didn't have claims. The claims have come in the third quarter. So 990 crores would only be the claims which have come in for the entire year so. But like you said, we are very conservative as regards reserving in the agriculture segment. And I'm sure that going forward in the next quarter, the reserving should take care of the claims which are coming in. But we don't anticipate any big claims. But I think the very purpose of reinsurance or insurance is to support the farmers and the public when there are claims. I think to that point, we are doing our justice to our job.
Ma'am, any update on the other two government schemes, Pradhan Mantri Jeevan Jyoti and Pradhan Mantri Suraksha Yojana? How has been the progress there? And all the three schemes combined, what is the kind of commentary you would have for the next year? How do you see it growing and everything?
I think on these government schemes, there have been requests from the companies, both from the life companies and the non-life companies, that they should be reviewed for rate corrections, given that these portfolios have not been too well. And I think it was time enough. It was the right time for a review. And I think the government will take that into consideration. But otherwise, on the health scheme, which is yet to be rolled out, we feel that actuarial price will play a big role. And the finance minister has just promised today that the funds are there with the government and they are looking to roll out the scheme to 50 million people in the country. And I think that also will be a huge success.
On to the big brokerage calls of the day. Soumit Sarkar has a few to tell you about. Morning, Soumit.
Good morning, Alex. On the big brokerage calls, first we have is UBS on Britannia. Now, they have maintained their buy rating on the stock with a target price of 5,550. Now, in the third quarter of financial year 2018, according to UBS estimates, Britannia has reported a double-digit volume growth in their domestic business for the first time in the last 5 quarters. And this double-digit volume growth is a positive surprise. Now, during the quarter, the raw material prices remained stable, which helped in profitability. However, geopolitical uncertainties in the Middle East and in Africa contributed to a slower growth in the international markets. Now, according to the brokerage, the current stock price does not price in the potential of new initiatives taken up by the company, and going forward, the brokerage is expecting the volume growth momentum to accelerate further in the second half of financial year 2019 as the benefits announced in Union Budget 2018 start reaching rural consumers. Second, we have is Macquarie on Shobha. Now, they have maintained their outperform rating on the stock but have raised their target price to 646 from 603. Now, the third quarter results of financial year 2018 were in line with their estimates. Now, the company demonstrated a strong operating performance according to the brokerage. Now, Shobha's quarterly pre-sales were at an all-time high, and going forward, new launches will aid momentum to this. Now, operating cash flows remained positive and strong at close to around 140 crore rupees, while the company's net debt position was under control according to the brokerage. Now, going forward, new launches planned in key markets like Bangalore, Chennai, Mysore and Cochin should aid growth in pre-sales according to the brokerage.
Thanks so much for that, Soumit. Now, there are also a few stories that you should consider reading on the website bloombergquint.com. Here are a couple of them. Markets regulator SEBI has cracked down on the alleged accounting fraud at imaging and printing equipment maker Ricoh India, as it called for a second audit of its account books and banned 7 persons, including former top executives, from accessing the securities market. Delhi-based Fortis Healthcare has sought a 15-day extension to declare earnings for the second quarter and the third quarter of the current financial year, citing statutory auditors' inability to complete the audit before the stipulated board meeting. Well, that's all we have time for on Daybreak, but all you need to know is up next, so do stay tuned. This is Bloomberg Quint.